Hey guys, so good evening. We're back for another stocks by request, but this time I want to talk about the top stocks requested via my Instagram DM, those that are sliding DMs, and then those who have sent questions via our YouTube community. For those who want to join, that links are in the description below. But if there's one prevailing theme from what I want to discuss today, is mostly these are companies and stocks that are highly connected to tech and are highly connected to the future that's unfolding in front of our very eyes today, which is because of the pandemic, everyone is forced to have either faster internet, transact more things in the internet, or just stay at home, or buy stuff at home, or watch stuff at home, or stream stuff at home. And that's why we're seeing more and more tech stocks just continue to move up or have moved up and are starting to correct, and we're just going to analyze them from a technical analysis point of view. So if you're new to this, my name's Marvin Germo. I'm a stock market trader from the Philippines, and I create daily videos on both of my YouTube channels, Marvin Germo and this one, Stock Investing Made Easy, with just one goal in mind. No? There's just one goal and one heart in this. These are not stock picks. These are not stock. Uh, this is not me telling you what stock are you supposed to buy. Please remember that don't let anyone on YouTube or on TV or any other platform tell you what you're supposed to do. This is me just analyzing stocks based on technical analysis. And I hope that as we're doing this, you're analyzing, you're studying, you're writing stuff down, and you're looking at the process and the logic of how I do it. This is not in any way me telling you to buy, sell, hold, or avoid stuff. Please, you have to make the decision on your own if you want to buy it. And what's interesting about this, if you are a Filipino watching this, you will generally see, no, but pareho yung chart. He's using the same chart on how he analyzes Philippine stocks, because that's how I believe technical analysis works. The same tools that you have when you're trading the Philippine market is the same tools, analysis, and strategies and principles that will allow you to trade global markets as well. And while we're waiting for the Philippines to recover and do better, the US markets tech has particularly crushed it and have been doing well. And that's why I encourage you. It's prudent for you guys to be exposed in different markets because it allows you to somehow navigate and weave to and find opportunities when things are not doing as well in the Philippines. So here's I want to start with Amazon, then we'll go with Nvidia, then Netflix, then we'll end it with Zoom. And as you all know, I've been a big fan of Zoom because everyone's using Zoom. Eh. Everyone is using Zoom. I make a lot of my videos where I interview people in YouTube using Zoom. I do all of my meetings in Zoom. When there are some seminars, I do it in Zoom. And guess what? As more and more people are using Zoom and it becomes the norm, how can they not just continually make money? Anyways, let's continue. So, by the way, one thing I'd like to mention also for Zoom is, sabi ko huli, but I'll start it with this already. A lot of it is from a subscription. You could say it's a subscription model basis where you pay once or you pay on a monthly basis, and the more people you have on the platform, the more admin users you have, also the more features you add, the more you also pay. And as you all know, the cost of that is, if they just want to scale up, I think they just have to put on more servers. And I think because they're very popular right now, their marketing is not as, they don't need a lot of marketing. And in tech, especially for those who are starting, they need to spend a lot of money to market themselves. But now, because Zoom is word of mouth, there's not really a large amount of money that's being spent already, in my opinion. But I'll have to check the numbers more. But it's really driven right now on, there's just really more users in it. It's just used regardless if there's a lot of people using free, there's still a lot of people who are paying for the services of Zoom. Anyways, what's so interesting, and I just want to start it with this, is everything happened from the breakout from this 200-day moving average, and that's why technical analysis is so interesting. You may not know what's happening uh, on the stock from a if you're not watching the economy of the US on a regular basis. But what you do know is this: since this time in 2019 all the way up here to February 3, it never broke past the 77, 78 US dollar level. But after that, after breaking that range, that's one, and after breaking the 200-day moving average, we started to see uh, the stock started to push up and move up and started to go and zoom at a much, much higher price. So the stock pretty much lives up to its name, that it's actually zooming. Uh, that aside from it zooming, we're seeing it from a tech standpoint do pretty well. Just to look at it though, the last price, the closing was at 487.66, which brings it lower. But what's interesting here is if you follow the chart, this upward move after the breakout is still pretty much consistent. If you connect this also, it's still pretty consistent. Then now I think this is something that's interesting also because this angle of elevation is a bit higher already, which uh, may cause it to either move sideways later on or may cause also a reversal. Please remember, from this point in time here, after the breakout, the stock is already up over 575%. After this breakout here, it's also up already over 172%. After this breakout here, it's up still plus 70 plus percent. So that being said, from a short-term perspective, I'd like to put this here. You could put a support level here at around the 459 US dollar level, then another one at the 504 level. So this is a relatively tight range that Zoom is moving on. Failure to break this will make Zoom attack this level, and it could move. This range is relatively smaller. This is around 10 plus percent in proportion to how it has moved in the past. So its main 200-day moving average is so intact. It's so far from showing us a reversal from the long-term trend. And if you try to put this line and this uptrend together, we're still seeing Zoom still relatively bullish. But here's the thing: if it fails to break out from 503, and then should there be selling that's happening, but the 460 level will hold, then we may see it start to consolidate from this range here. Let me erase this so you see it better. We may see it consolidate on this range, but if it doesn't, we may see it move on this particular level. So these are the next ranges for Zoom: 460, 407, and you have also the 283 level, which is quite steep and quite far. And we, as of this point in time, Zoom is not there yet. But what's clear though is Zoom from this perspective has not yet broke out from the 500 peso 500 US dollar resistance, and from a support level it has not it has your 459 level as your area of support. So that's Zoom. Let's look at Amazon right now. For Amazon, Amazon is not has evolved. No, it's not just merely uh, all about them being an e-commerce platform where people can buy and sell stuff, but I believe they're evolving into different things that you're seeing a lot of innovations from them. And I think what people just need to realize is this: it's all about valuations right now. Is it something that at its current price, on how it has moved, is it something that's relatively cheap right now as compared to where it was? Please remember there have been a lot of large pushes already after the drop. As what I've said in the previous videos, that the highest point that a lot of the US stocks have hit was around February, and Amazon at that time was around 2150, and it started to drop. It hit 1830, but after that, boom, it started to push. It broke past the previous high and has not looked back and gone back to where it was last March. But here's one thing that's so evident from Amazon is that the uptrend that started last March, as of the time I'm making this video, is already broken. P ratio trading 12 months is at 121.91, which of course Amazon has had higher P ratios than that. But as of this point in time, the 20-day moving average is broken. As of that point in time, the uptrend that we have here is also broken. Here are the resistances for Amazon. You have this 353539, then you have this which also got broken. 3247, then you have this right now. So one thing to watch out for Amazon is it's trying to hold on and try to make its way above the 2,900 level. If it stays above this, then it protects itself from a deeper downside that could bring Amazon back to the 2.5 level. Because if it bounces, then you now have a tradable range of 2,900 US dollars all the way to 3.2, which you have it here. And if it breaks past that level, you could see it move all the way up to the 3.5 area. So that being said, if it breaks past 2,919 and breaks past or at least bounces and stays above that level, you have a 12% upside to the 3,251 level, and then you have around a 20 plus upside should it go back to the resistance at the 3,500 level. So that's where we are looking at Amazon. I repeat, the upward push, at least a trend from the trend line that I drew here, and supporting that with the 20-day moving average is broken. If you're a position trader and you're fine with that, that could also be, and that could lead also for a take profit signal right here. Now, for quick traders, again, this is the range that you need to respect. Comment below if you're learning. Comment if this is something that's helping you. Now, let's look at Nvidia. As you all know, Nvidia, a lot of people, uh, especially those that are connected in the gaming community, know Nvidia more than most people who are not connected to gaming. Uh, for that reason, as compared to other, how do I put this? As compared to other, as compared to other, kaya pala ako nagkakamali, I've been writing it wrong. Uh, as compared to other stocks in its almost similar category in terms of branding. I think this is a bet on the future. This is a bet on how we see AI to be, how we see uh, faster chips to be also done. So, anyways, similar to Amazon, we've seen Nvidia start to drop here, hitting the 20-day moving average. But after that, if you look at it, it started to bounce, and that's how strong 20-day moving average is. And as you can see from that, from the bounce of the 20-day moving average, sorry, after the bounce from the 20-day moving average and after it escaping its downward push, we saw it start to go up. And currently, from where it is right now, it's up around 163%. So the difference between NVIDIA, comparing it with uh, Amazon, is Amazon's uptrend, at least from the March reversal. Amazon's uptrend has been broken. For Nvidia, it's still intact. But for those who want to trade it from a support and resistance level, this is the support 471, and then you have your resistance. You can peg it here at the 587 level. If you want to put something shorter, you could have this at the 533 level. So please write this down: support 478, resistance 533, next resistance 580. The upward trend is still intact, and that's how strong a 200-day moving average is. That once it started to correct, once it started to fall, and as it started to hit those moving averages, you start to see it bounce. And up until now, basing it from the 200-day moving average alone, there's no sell signal yet. And basing it from this trend line that I drew, it's still evident that the stock is still pushing towards its uptrend. Now, from a support and resistance point of view, for those who want to do quick trades, again, support is at 478, bounce from 478. First target price will be 536, breakout from 536. Next target price will bring it back to the 580 level, which is around 24 or 25% close to the support. Buy at support, sell at resistance. So that's where we are from Nvidia. Then I just want to end with Netflix. So Nflx, this is Netflix. It's still above the 200-day moving average from a support and resistance perspective. The tradable range for Netflix is right over here, 460, 563. Bounce from 460. Target price will be 563. This is how it could possibly look like. This is a 22% upside coming from, also, if you look at it here, this is the March movement that brought it down. The difference between Netflix and Nvidia is Nvidia, after hitting the 200-day moving average, started to bounce. For Netflix, it took a few days before it dropped and started to go back up again. But if I'm going to draw here, please take note that the 200-day moving average is still showing you that there's still a bullish move for Netflix, but for the trend that I drew from this point in time, it looks like that it got broken. But what's so interesting is that the 459 support level held its ground. And that being said, the move right now is 459 support, bounce from 459. The longer term resistance to watch out for will be at the 560 level. But you could peg another short term resistance here at around the 510 mark. So again, 460 support, 510 resistance, 560 the longer and stronger resistance, which it tried to break here last July when it tried to do an all-time high, but it got reinforced at this level as a resistance brought about by it hitting it at the start of September and starting to retrace downward. So there, I hope you guys got a lot from this, and I hope that this is something that's interesting for all of you. If you guys are trading Philippine markets, just watch the video before this where we did a deep dive also on Philippine markets, and we talked about it, analyzed it from the stocks that have been so popular in the Philippines, dito and now. They're in the video prior to this. Then also in this day, in my main channel, Marvin Germo, we did a deep dive with the head of research uh, of AB Capital, Lester Asurin, where we talked about AC Energy. So there, if you want to know more about investing in the markets, on the description below, we have my books, 5 books on the basics of the market, technicals and fundamental analysis. We also have a Patreon group for those who want to interact on a more intimate level and those who want to support the channel as well. Then we have our YouTube community also for those who like to support the YouTube videos that I do. Then all of the playlists and everything else in between is there. And I forgot to mention this. Uh, if you want to trade US markets, one way is to do it via eToro. For eToro, you can have a virtual account where it costs you nothing to start, because when you're trading a virtual account, it's as if you're trading the real market without shedding your own money, and it allows you to also practice, and it allows you to also to build the skills right beside it, side by side through it, so that you get to learn while you're figuring out how you get to earn later on. And then later, when you start investing, they have what they call fractional shares that allows you to buy Amazon, Google, Facebook, and all of those stocks that are relatively higher and expensive for $50 only. So if you want to invest on uh, US stocks for $50, then you can then you can try eToro for $50 only. So that's it for now. I hope you guys got a lot from this, and I hope that this gave you enough insight that even if you're a Filipino in Manila, in the Philippines, or in other countries not in the US, you can still trade US markets, because the skills that we're using via technical analysis is something that you can deploy, and it's something that can allow you to trade and invest and make money wherever you are in the world. So, Marvin Germo, I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.